Well, investors, meantime, are tuned into a busy week of Fed speak. Jerome Powell is heading to Capitol Hill for 2 days of questioning, starting Wednesday and then Thursday. But he's not the only key Fed figure speaking this week. Joining us now, Brian Cheung with the latest. And Brian, not only that, we actually heard a little bit from Jay Powell this morning. He spoke at the Boston Fed. He spoke. We're hearing from some other Fed officials today. What should we be keying in on?
Yeah, well, it's a noisy week, as you mentioned. Obviously, Federal Reserve Chairman Jay Powell is scheduled for 2 days of questioning on Capitol Hill. But we also have 4 FOMC voters that are scheduled to speak this week, including James Bullard, who you just saw on the screen ahead of you. He spoke earlier this morning. Both Powell and Bullard's remarks this morning did not have much on monetary policy. They were more or less just opening remarks at these conferences saying hello. But a few things to watch for as Jay Powell hits the House Financial Services Committee tomorrow. First, obviously, what the trajectory is on a possible rate cut, perhaps as early as the July 31st meeting. There are some, like Capital Economics, that say that he actually might push back on the idea of a rate cut coming because of the strong jobs report that we saw last Friday. Again, 224,000 jobs compared to expectations of 160,000. So blew it out of the water categorically. The second thing to watch for is obviously Fed independence. So we've heard so much from President Trump about how he would like more easing policy and maybe even more quantitative easing. So we'll see if Chairman Powell pushes back, especially when you consider that this is a House Financial Services Committee that is dominated by the Democrats right now. Obviously, Maxine Waters, in addition to freshman Congresswomen Alexandria Ocasio-Cortez and Rashida Tlaib, could be in view as they try to maybe push Powell to push back against the president. And a third thing actually to watch for that might be a little bit of a bonus. The Fed minutes actually will be released at 2 p.m. on Wednesday, give us a little bit more clarity into what we actually saw in the last June meeting, where the Federal Reserve actually decided to hold rates steady at the current range of 2.25 to 2.5%. So plenty to watch for as Chairman Powell hits the Hill tomorrow.
And Brian, I know you will be covering it. Thank you. But we're going to keep talking about it with the panel right now. And Emily, I am curious, do you think that some investors are perhaps misreading the tea leaves? We have some who say it's definite 100% guarantee we're going to get a rate cut at the end of the month. And others are saying not so fast now.
Well, right now, according to CME Group, 100%, that's the probability that markets are pricing in of a rate cut by the end of this month. But we have seen that these Fed fund futures are retreating from that probability of a 50 basis point cut. So we're looking at a much less aggressive 25 basis point cut that might be in the cards. But what's really interesting right now is just to see the way that markets are reacting to bad news on the economy and on good news. So they're taking good news, and we're seeing stocks actually pulling back like we saw after the jobs report. And this is just a cycle that is not sustainable, and it's something that after the Fed there is some clarity on their direction that we'll probably see start to pare back.
Can I just say a 100% probability of a Fed rate cut at the end of this month is way too high. I mean, almost nothing is 100%. Torsten Slok of Deutsche Bank, he's been sending around this chart, getting a lot of attention, showing that the market is often wrong when it tries to guess what the Fed is going to do, or it's wrong in terms of timing at least. It doesn't happen as quickly as the Fed. I mean, we just had a jobs report, 224,000 new jobs, way above expectations. The unemployment rate's at 3.7%. There are no problems at all in the job market. I think the justification for the Fed cutting is not there in July.
Well, what's fascinating to me is that the Fed has striven for more and more transparency, right? They now have press conferences after every single meeting. They come out with statements. They come out with the minutes. We've got Jay Powell testifying this week. And yet there's still this ambiguity over what the Fed is going to do. So is that a problem of the Fed, or is that a problem of the market not reading and not listening to the Fed when the Fed says it's going to be data dependent, for example?
Yeah, I think it's two things. The Fed itself does not know what it's going to do. That's the reason it has the meetings, right? Yes. To get together and all these smart people talk about what should we do about monetary policy. And then they come out with a decision. That's the first part. The second part is Trump. So imagine if Donald Trump were a normal-ish president and he were not continually roiling markets with his trade protectionism and threats of tariffs and things like that. And you could take that off the table. If you could take that off the table, I don't think we'd even be talking about this because the Fed would not be cutting. And Powell himself, he called Trump's trade war cross currents. He said we're now paying more attention to cross currents since the beginning of May, which is when the latest round of Trump tariffs went into effect, and he threatened more. So that's the other problem here.
Well, because the data points you're talking about, that might indicate the cut is still coming. wage growth was flat and has been flat, and perhaps not enough for the Fed to truly act, but it's flat for the last two reports. And we also have, they've lowered their inflation expectations at the Fed, which is a problem for the Fed, isn't it?
Well, and the other thing, the Fed says it's going to be data dependent and that they don't put too much emphasis on any one data point. That jobs report was one data point that the markets completely have taken now to say that, well, the Fed is now going to be less dovish. So we just had, job openings for the JOLTS jobs report from the Labor Department also come out today. That showed that the job openings actually eased in May for a second month. So we're getting this conflicting data. So it's showing that maybe, the Fed shouldn't be zeroing in, or market shouldn't be taking the Fed to be zeroing in on these single reports.
I like what Jay Powell said about the 2% target, by the way, when he talked to the Economic Club in New York. He said, our target is 2%. Not about 2%, not around 2%, not a little bit below 2%, but 2%. And we're not at 2%, so you might be right about that.
Interesting. We'll see if he repeats some of that when we hear from him over the next couple of days.